We'll talk about an intelligent investor's mindset, psychology, behavior, and competency. Hi, I'm Henrik from Value Investing. First and foremost, if you want to expand your financial skills, make sure you subscribe and hit the bell icon not to miss anything. Also, if you prefer to see subtitles, they are available. Okay, the most important part to be successful in investing is to have the right mindset, psychology, and behavior. You can't just do the right calculations and call it a day. Of course, you need to know how to read financial statements, how to forecast stock prices, how to understand the CEO and the business overall. But that's not enough, because there is no good investment, there is a good investor. It's all about having the right mindset. Calculating the numbers can do everyone, but only the right mindset made Buffett a Buffett. I will talk about 4 main ideas which can help you vastly. Let's start. Number 1, the biggest enemy is in your head. If you know how to deal with it, you can gain success. Everyone knows that panic selling is not a good idea. But a company that announces it earned 21 cents per share instead of 22 cents can lose 5 billion of market value in a matter of a minute. Anyone knows that nobody can time the market. But investors still hang on every word from financial pundits who prognosticate on TV. So to deal with the enemy in your head, you must create your own rules and stick to them. The key to overcoming emotions is being able to retain your belief in the real fundamentals of the business and not get too concerned about the stock market. And if needed, take the loss, but be loyal to your rules that are formed based on the right education. Don't make decisions when the prices go up or down. Make well-thought decisions before the prices go up or down. Know your steps beforehand and always ask yourself if your actions are emotional or rational. Number 2, an intelligent investor is a lifetime student. If you have doubts about your investment, you definitely need more education before you act. Competency is formed on enough education. If you are educated enough, you know how to find the information you need to make a good investment. If you don't know how to do it, you need more education. Of course, I'm not saying that someday you'll not need education anymore, but instead I mean that your education must reach a certain level before you gain the confidence to act in the market. So your job is to get educated to be able to take advantage when opportunities arise. By the way, smash the like button if you are getting value. That will help us do more videos for you. Number 3, focus on long-term investments and wait. Yes, wait. Don't rush to invest. Don't trade. Wait for your lifetime investment. And lifetime investments are not done within a week or a month. Wait for it. Wait for the opportunity to arrive. It definitely will. All bargains are not closed forever. Bargains will always happen. Factors that distinguish Warren Buffett, Charlie Munger, and Peter Lynch from other investors are the tremendous patience and discipline they have. As Warren Buffett said, the stock market is a device for transferring money from the impatient to the patient. So your job is to wait, then wait. And after waiting, you just wait. And then wait. Oh yes, forgot to say, you just wait. And then act. And then wait. And wait. Yes, wait. Yes, I know this is boring, but this is the path to wealth. I don't know any day trader from the Forbes richest list, but instead I know many business owners and investors that have done very few investments in their lifetime. Believe me, you only need a few good investments in your lifetime. You don't need to trade all the stocks in the market. Also, if you stick to this channel, I'll teach you how to generate income while you are waiting. Also, wait for my future videos to get that education. Number 4, Behave yourself as a disciplined investor. Always read the official reports by the companies you own or plan to own. Keep track of the numbers and pay attention what the CEO tells in the letter to shareholders. If you own a company, write down why you own it and write that you are not going to sell unless the fundamentals of the business are changed or the stock became overpriced. I'm not joking. Write the reasons why you bought it and promise yourself to read it before you plan to sell. Maybe you think you'll always remember all the reasons you bought it. You will just find yourself panicking when the prices drop by 30 or 50%. To stay rational at that moment, you will only need to remember your long-term goals with that company, which should be written by yourself because you will forget most of them while panicking. An intelligent investor knows why he has made a particular investment and never let the market lead him. Warren Buffett said that he would be happy if the stock markets get closed for 10 years after he bought his investments, so he would have no means to track his investments while they continue to grow. This video is episode number 6. And if you have missed the previous videos, click on the card here to start watching this video series from episode number 1. Now please make sure you subscribe and hit the bell icon to get notifications when I upload the new video so that you don't miss it. And if you could take any value from this video, please hit the like button and share with your friends. And leave your comments below about how you stay rational when the prices fall. Thanks for watching, watch the next video.